Yo, what is going on YouTube? I am Germ here. Today, as you guys can see up on the screen, I want to talk a little bit about Sofi Technologies Incorporated, or ticker symbol, I can't even talk, SOFI, or Sofi for those of you who are maybe not as familiar with the stock or with this company. And today so far, it's only noon here on the East Coast. Not a great day for Sofi. They're down 3.89%, down about 18 cents, trading at $4.46 at the time that I'm recording this video. We closed at $4.64 last Friday. And obviously this is not a great day for SoFi. If we look at the overall market as a whole, everything's red. Dow Jones down a little bit, S&P down over 0.5%, NASDAQ down over a full percent, and the Russell 2000 down a little bit less than 1%. So lots of red all over the market, but again, those major indices, they are not down close to 4% that SoFi is. So SoFi is definitely underperforming the market today, and underperforming the market in a pretty significant way, which is never what you want to see. And of course, this has been a tough year, a tough everything for the market, a whole ton of stocks and SoFi specifically. So, sucks to not be ending the year all that strong. If we look at the last month here, we're down 8.62%, and this is after being down 71.62% year to date. Really, really crazy stuff. But of course, as always, the market's just in a really bad environment right now. Doesn't mean things can't turn around. Doesn't mean things can get better one day. But plenty to talk about. First up, I want to talk about this post from the SoFi stock subreddit, SoFi's business model explained. A guy doing a really, really nice breakdown about everything that SoFi has going on. SoFi's strategy is called the Financial Services Productivity Loop. They show it in every earnings report presentation. What this basically means is that SoFi attracts new members through products such as Invest, Checking, Savings, Relay, and CC, and from there members branch to more products and quite possibly loans too through discounts and point usages. This strategy has proven itself over the years as SoFi's products per member ratio has grown from 1.11 in 2019 to 1.52 in quarter 3 of 2022, which is great to see, and they definitely want to continue to get those numbers up and up. Obviously, that lowers customer acquisition costs if you can bring them in for one certain price and then branch them out to all your other things. You've, for lack of a better word, acquired them multiple times just for that one single price. And it just allows you to get more and more money out of each of your users. But especially if you're offering them good services, you're providing value to them for that money that you're making. With more product types in the loop, for example, paying for and options and investing, the loop can further push for more products and higher ratios. Of course, they offer financial services, so the business model here is to provide as many useful products and services as possible, preferably created by the technology platform, regardless of how much revenue they will actually bring, while at the same time aiming to improve profitability of the segment. The goal in this segment is to attract members by the sheer amount of easily accessible products offered that can't be matched by anyone else. And we can see here financial services revenue per quarter in the thousands, 2020, 2021, 2022. This is going up and up and up, pointing in the right direction. This is a good thing overall. The end goal for this segment is to provide a third of SoFi's revenue with about 25 to 30% profit margin. Long way to go still, and it seems like this plan and actions do work well. Then we have the technology platform. It is always amusing when you try to explain the tech platform to someone and use the whisper Amazon word. Again, the AWS of fintech or whatever. They go nuts claiming that you can't compare SoFi to Amazon because Amazon is unique. Sure. Who knows what will SoFi end up becoming? No one knew what Amazon would become, but regardless, I'm not comparing SoFi to Amazon, never have. I am, however, comparing Amazon Web Services to SoFi's tech platform at its core idea, not at scale. I wrote a short post before touching the surface of what AWS is and what SoFi's tech platform aims to become. You can check it out here, and he has more posts if you guys do want to look into that stuff. The entire purpose of the tech platform is to give financial institutions and banks not Lego pieces, but entire Lego structures for them to easily construct their building, with them only needing to adjust minor things. So again, just like AWS, setting up, server space, web space for just all different kinds of businesses and everything. SoFi trying to do that for banks, financial services, financial institutions, that type of stuff. Interesting business model, can be very profitable, can be very scalable, and can make you a lot of money, obviously, at the end of the day, if you are successful. We see the technology platform revenue per quarter, again, 2020, 2021, 2022, another thing that is increasing. The end goal is to provide a third of SoFi's revenue with about 30 to 40% profit margins. Not bad. They also have lending going on, of course, obviously here, and we have the lending revenue per quarter, 2019, up in 2020, up in 2021, and up again in 2022. Lots of different things going well. SoFi, making money a couple different ways. They have a lot of different aspects of their business, and overall, a lot of these things can be easily broken down. They make sense. They are just kind of tried, true, and tested business models. Doesn't mean SoFi is going to work out. Doesn't mean SoFi is going to be the biggest player in this game. Doesn't mean they're going to, be the ones left at the end of the day. But it means there is a very, very easy to see path to them getting to where they want to be. And I think that makes for an easy or at least logical investment thesis in a lot of ways if you do believe in SoFi and the things that they are doing and the leadership and all that. But overall, a good post. Somebody else asked, what is the deal with SoFi and auto loans? If SoFi really wants to snag people, especially in the time of rising rates, they should maximize their auto loan department. Ideally, if they can originate these, work with dealerships, financing teams, offer easy pre-approval to make the process as smooth as possible, be very open about rates when applying, no prepayment penalty, and discounts as a SoFi Plus member, I'd much rather go SoFi than goofing with credit unions. And it seems like the SoFi stock subreddit does not really love this idea. Generally, in a recession, auto loans are the first kind of loans that go belly up. And the second top comment being auto loans is a terrible idea. So, I don't know. Just kind of thought that was interesting and some different stuff going on. Obviously, people have different ideas and ways that they would like to see SoFi go about things in the future. This, kind of a funny post. Wall Street bets, losses are win. This guy says, loss porn, just got $50K personal loan approved, so I'm going to get it back. Wish me luck. This is on SoFi. He gets approved for a $50,000 personal loan. He's claiming, he's going to go onto, the stock market and try and gamble it and run it up and probably post, his big winnings on Wall Street bets or whatever. There are some skeptical people, like Wall Street bets full of clowns. This person probably just took out a loan not for investing and decided to get some internet points, which is very, very possible. But either way, it's a funny post, and it also shows that people, are taking out some big loans with SoFi and, making the company and the stock some money at the end of the day, which is interesting to see. 3.5%. So Financial says, all my SoFi family, we just got 3.5% APY at SoFi at Anthony Noto, and Anthony Noto did retweet it. Your savings APY just increased to 3.5% on all savings and vaults, and still earning 2.5% on checking, which again, the 2.5% on checking feels really, really great. It's awesome. And now the 3.5% on savings. It's super hard to keep up with. That's the one kind of thing. It has been super confusing and weird because all the rates have been changing so often. And at one point, checking and saving were going up together, and then savings started going up and checking wasn't going up. And I don't even know if this stuff moved down ever. But, with the Fed changing the rates and everything so much, SoFi's been changing them so much. It is a little bit confusing. It is a little bit hard to follow. But at the end of the day, that's where we're at right now. 2.5% on saving, 2.5% on checking, 3.5% on saving. Pretty good, pretty competitive overall. As somebody who uses SoFi, I definitely appreciate, seeing that little bit of extra money come in. We do have somebody breaking down the new SoFi Pay in 4. Pay in 4 is an interest-free way to make purchases and then pay them off over time. Purchases must be between $50 and $500 and are split into 4 interest-free payments. 25% is due at the time of purchase, followed by 3 more 25% payments every 2 weeks. SoFi members receive a 0% interest loan that is paid off in full in 6 weeks. There are no fees and allows members to spread out large purchases over a longer time frame. Who qualifies? Only SoFi Plus members qualify. Monetization, SoFi will get revenue from the interchange fee from the transaction. MasterCard installments have a 3% merchant fee, which is assumed that SoFi will take a cut as they are extending the loan, although it is still not certain what their cut is. SoFi margin will depend primarily on that cut. If the cut is 1% of the purchase price, that would be the equivalent of 8.7% margin on the loan. At 2% of the purchase price, that same would be 17.3% margin on the loan. It's also worth noting that the 1/4 of the loan is paid immediately, so ROI is even higher. And the implications for Galileo and Technesis. This is the first Galileo plus Technesis combined product. The same Pay in 4 offering will be extended as a white label product to all Galileo and SoFi, or Galileo and Technesis clients. So kind of interesting stuff there, breaking down how that goes. And then we had this as well, Kevin Barker, his performance and success rate. This guy is an analyst. This isn't even something, I didn't even know what this was. I was trying to, this is one of the things I was looking at. I don't know. This was on the SoFi stock subreddit for whatever reason. Apparently, he's been buying SoFi or something recently. Yeah, he has. So he's overall a well-performing investor. He has been buying SoFi. Says his price target is $750. So hey, maybe something to look out for. There are some knowledgeable and good investors that are starting to hop aboard the train. Again, if his price target is $750, right now we are at $446. That would be a nice little run-up. We'll have to wait and see. But pretty much it was this video today, guys. Hopefully I catch you in the next one. But until then, peace.